This is what the future looks like. You'll see this today, of course, but every street corner will be filled with those who fell into the downward spiral. Every country today is going through a series of events that are always seemingly assisted by those in control. They're helping us, they say, but meanwhile, they are really just causing the problem in the first place. But will the public ever wake up to this fact? You came here for the truth, so let me unveil that for you. I'm going to show you so much information. It is unbelievable. I couldn't put it into a two-part video. I wanted to just put it in here in this one. Not going to waste any more time. Let's get into it. This article was from August 17th, but it's going to lead me into what I'm going to show you next. FHA mortgage delinquencies reach a record led by New Jersey. The share of late FHA loans rose to almost 16% in the second quarter, up from about 9.7% in the previous 3 months, and the highest level in records dating back to 1979. So we know that the numbers have grown significantly. We know that this group, we have a lot of subprime. There are problems here with these people paying. We are told that it's going to be okay, but you got to understand at the end of all of this, if people are deferring their payments, it's not as if it simply goes onto the back end of that. They have to pay the interest. They have to pay up, and all of that is going to be one exaggerated mess at some point. This article here out of Wolf Street gets into some more detail. American Enterprise Institute's Housing Center, which collected the delinquency data from the FHA, sees the eventual impact of the delinquencies in this way. All right, look at this. It would be expected that these delinquency percentages will increase over time. That's pretty obvious. At some point, a significant percentage of the then delinquent loans would be expected to be placed on the market by owners under distressed conditions or become foreclosures and then enter the market. It is at this point that we would expect home buyers markets to develop in zip codes with heavy exposure to FHA and other high-risk lending combined with high levels of delinquency. Okay, so basically what they're saying is in the areas where there's a lot of FHA loans, we got a lot of delinquencies, and those are prime targets. They have a list below. I'm going to put the link in the description. There are areas all over the place in the United States that they mention, and you need to check it out if you are interested. But understand what we are looking at today. A lot of the same issues that were present back in 2007 leading into 2008, you know exactly what happened. They mentioned something else I wanted to note. So there is a boom on one side of the housing market, and there's already a bust forming on the other side of the market. FHA mortgages are far from the only delinquent mortgages, Fannie Mae, Freddie Mac, and so on. I've been talking about how this is just the tip of the iceberg because the problems are only what we are noticing at this time. But we have to simply have the foresight to look out a few months down the road, a year down the road, and see how everything will progress. Of course, there are serious issues today, and the derivatives are interconnecting all of it. I talked about the commercial mortgage-backed securities and the importance of following along. We know what's going on with the hotels. We know what's happening with the retail industry. Take a look at this. One of New York City's biggest landlords is ramping up a campaign to bring financed tenants back to their offices. If you go to the business districts, is referring to New York, Midtown, it's deserted. If employers tell their employees that they don't need to come back, they're going to decide to hang out at their parents or in the Hamptons and phone it in. Ultimately, businesses are not going to be able to survive that, and this is the case. Yes, things for so many businesses today are operational. They are still going. Maybe they're closing down stores, which I'll show you some more detail about that. They're becoming, quote, more efficient. I love that. But anyway, this cannot last forever. And at this time here, there is no end in sight for many places like New York. MTA preps commuting doomsday scenario for New York City if no aid comes. So they need more money, obviously, not enough ridership. The income isn't coming in, that revenue's not coming in, so they need something from somewhere. Right here, transit agency mulls 40% cut in the subway and bus services. We'll see what happens. We'll see if this actually takes place. It wouldn't surprise me to see them trim the fat at least, but at the same time, if that occurs, are you going to need as many subway drivers? Are you going to need as many repair people? Are you going to need those bus drivers and everybody else that works on these routes some way, shape, or form? Another point I wanted to note, higher fare increases and layoffs as they mentioned here. So of course you get reduced service, but your fees are going up. This is not a very good thing to see, but it happens all over the place. Canada is dealing with the same issues as the United States and every other country. They have been piling up the debt. They have been piling up the deficits. Canada's budget deficit hit $120 billion in the 3 months through June, already more than double the largest yearly shortfall the country has ever run. Here you can see the chart associated with that. It is extreme, but every country is doing this now. And not only are they given permission to go this far, there is nobody on either end of the spectrum that is opposing this. Basically, they just say spend as much money as you can. The only arguments are who gets the money. It's not a matter of how much. It's not a matter of should this actually be done. It's simply about the direction of the money. And that's what they argue back and forth. They make it seem like they're actually there and caring. But when you look at it on a deeper level, it's all about sneaking in these little things into the bills. And I've talked about this many times before. You look at something completely out of whack. Let's just say it's a spending bill and they're trying to get restaurants help. They will put something in that has nothing, absolutely nothing to do with restaurants, nothing to do with retail, nothing to do with jobs, but it's part of a other agenda. They couldn't get that passed separately. They sneak it in knowing that if they don't pass the bill, it's going to look bad on them. And this trickery occurs every single time, particularly with those that are always in the news and stuff, because people don't know what it's all about. Hey, it says this CARES Act. If you care, you're going to sign the bill. I want to touch on many factors here related to what's going on in the stock market. US stock market looks overvalued to corporate finance chiefs. This is just showing you right down here, might be small in the font, 84% of them. 84% of them, Deloitte has suggested that they believe are looking at an overvalued market. Yet they are still going in with all the buybacks. They are still pushing the stocks higher. Valuations are nowhere near any level of normal, and yet this is the case. When we look at what's going on with the stocks, as I've mentioned many times before, you can't just say they are doing well, they're doing bad. These are generalizations. Here is a breakdown of the S&P 500, and they show you the financials, information technology, energy, utilities, and all of these broken down. You could see how different this has been depending on what sector we're looking at. Information technology has done very well. But you look at, for instance, energy, it has performed very poorly. Yes, it has come up from the bottom, but there are huge disparities when you look at this. Now take a look at this. S&P 500 correlation with the VIX index. So that one at the bottom where you see that red line going across, that's the VIX index. And when it spikes, we tend to see some issues with the market after that. It isn't necessarily 100% perfect, and any indicator is not going to be the be all and end all, but it is very interesting. You look at many previous instances throughout this period, it shows us from basically 2017 up until the present. And every time there's a pullback, we tend to see a elevated VIX in the time prior to it. So it's just an interesting thing that I wanted to bring to you. And right now we are in one of those cases. Apple market cap as a percentage of the Russell 2000. We have never seen anything like this, at least on this chart, which goes back to 2013. It has escalated to new highs. We're looking at the small caps basically being nothing. They have not performed anything like a stock, Apple in this case. Apple put call skew. Essentially what's been happening is as the stock has been rising, more people have been going in and they've been using options. Options are supposed to be for those who are more skilled, yet we are seeing more and more people jump in. This is connected with that. Individual investors have been steadily increasing their activity in options. This just shows you the percentage of options volume from single contract trades. Over time, from the beginning of January 2019 up until the present, we have seen this going higher and higher and higher. And what does this do? You could say it's one aspect of the market, that's it, nothing to look at, and you simply move on. Or you could understand that this is leverage. More and more leverage is being used to trade on the stocks. That means when there is a downfall, it gets worse. It gets worse and it gets worse. That's why this never ends well. It's never a soft landing because there's too much leverage, there's too much margin, there's too much debt, the deficits are too big, and nothing is ever done to fix any of that. S&P excluding tech versus tech. The green line, I shouldn't have to tell you, but the green line there, that's tech. It has performed incredibly well. This chart goes back to the beginning, 2019, up until the present. You could see what's been happening over this period. You exclude tech and you are not even back to where it was at the height of 2020. We know where the money's at. Before I show you what's going on with the stores, closures, and so on, I just wanted to bring you this quickly. Robot boats leave autonomous cars in their wake. So we're looking at yet another avenue where there is more automation, where there is more robotics being used, and that will be used in the future. I'm interested to see where this goes. They give you some scenarios. If you want to read the article, it's here out of the Wall Street Journal. Bed Bath & Beyond cuts 2,800 jobs in restructuring move. It's not just the stores. Remember, all of these different places, I see it all the time. They're talking about the store itself. No, you got to understand there are head offices, there are corporate offices, and those people are getting cut as well. Gap is closing more than 200 stores this year. I probably have shown this at one point or another. The article is from the August 28th, but regardless, more and more retail locations are closing, but it's not just retail. Marks and Spencer to cut 7,000 jobs. Doesn't matter where you are around the world, there are many places that were so busy, so popular, and yet into the future might be a very different scenario. This one happens to be about Wells Fargo. Nationwide, the bank has closed more than 70 branches in 2020 alone. They talk about what they're trying to do, how they're trying to change things. All I'm trying to show you here is simply that this can come from any industry. It doesn't have to be just restaurants, it doesn't have to be movie theaters or anything else. It's coming from all different industries, and that makes this much more difficult to predict. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me, so I want to thank you for that. If you want to check me out on Instagram, Twitter, anywhere else, just search The Money GPS. I'm there. If you want to learn how to sell stuff online, I'm talking about e-commerce. This is so important right now as a skill for people to understand. Even if you don't want to sell on it, just to have the skill, just to have the knowledge. You can do so for free. I made this course for my subscribers, theamazongps.com. Do you want to understand the financial system? I'm talking about everything from top to bottom, A to Z. These two books have everything you need to know. You can flip through them at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? A lot of detail. If you haven't watched it, you definitely want to. Click it. I'll see you there.